Hi guys, welcome to this Money Control live stream. You're watching IPO Watch with me, Nandita Khemka. Well, today we'll be focusing in on this company called Indegene. The 1850 crore rupee IPO that will be opening for subscription on the 6th of May. Now, the company has fixed a price band of 430 rupees to 452 rupees a share for its IPO, and the company has PE or private equity firms like Carlyle and Nadathoor Far East as its shareholders. In fact, let's bring on board the management, Manish Gupta, who's the chairman and CEO of the company, to talk about the fundraise as well as the expansion plans of the company. Great to have you, Mr. Gupta, on the show. Let me first begin by asking you, after the IPO issue, what percentage of stake will Carlyle hold among the selling shareholders?
So Carlyle right now is around 21% pre-IPO, and they will be around 15% after the IPO.
All right. So you're raising somewhere around 750 crores via the fresh issue. How much of it will be used to repay debt? And post the debt repayment, what would be the amount of debt on your books?
So 400 crores is just south of 400 crores, 391 to be more precise, is going to be used to pay debt, and after this debt is paid down, we will be a zero debt company.
All right. So you will be debt free after that.
Absolutely.
Okay. So part of the fundraise is also pertaining to inorganic growth, right? Do you have any more acquisitions on the anvil as part of your inorganic growth strategy?
So Nandita, we as a company over the years have done 13 acquisitions, right? Over our 25, we are a 25-year-old company, and we have done 13 acquisitions, pretty much most of them in North America, two in Europe. And we've been very successful in finding these acquisitions, getting these deals done, integrating the companies, using the very specialized capabilities we have acquired to enhance our domain expertise, our digital portfolio, which we have. And increase our footprint and the value add we bring to our clients. In that context, we are always looking at opportunities. We have a strong pipeline of companies which we are talking to and evaluating.
Right. You have recently acquired Trilogy Writing to deliver quality medical writing output as well, right? So give us a sense on the size of the medical writing market and the anticipated revenue contribution from this particular acquisition.
So if you think about it, just take a step back. We are talking about an industry which is north of life science industry is north of $1.8 trillion, right? It's slated to be $2.1 trillion in 2026. The operational spend on some of the areas which we operate in, which includes regulatory and medical writing, is north of $156 billion. And slated to be north of $200 billion by 2026 again. Overall, this is a fairly large market, right? And around 20% of this spend is on regulatory and medical affairs. That's the broad market we are talking about. The other thing which I would add is given the strong pipelines which the pharmaceutical industry has, and hence the slated drug launches coming up, which we again have called out in our RHP, is pretty large, right? In that context, the need for very specialized medical writing and having fast turnarounds, right, using technology, which again plays to our strength, is an opportunity we are very excited about, and that's the reason we did Trilogy as an acquisition.
So, talking about your business, there are no listed peers in India and globally as well that are of comparable size from the same industry and with similar business model as yours. But the life sciences operation is a highly competitive industry, right? So, what's your game plan to tackle competition from the companies that offer similar solutions in the same markets?
So, Nandita, we are a 25-year-old company with very strong domain expertise. Out of our approximately 5,200 people, 20% come from a medical background. These are medical doctors, PhDs, pharmacologists, working next to data scientists, data engineers, software engineers, analytics folks, then brand strategists, creative directors, omni-channel orchestrators. We have offices in 17 places across the world, very large footprint in North America, Europe, Tokyo, Shanghai, right, servicing the LATAM market. through our office in Mexico. We also have a very strong technology digital profile. These are platforms we have invested in, not from yesterday, but for a very, very long period of time, and we use them to deliver solutions to our clients. We work with the top 20 global pharma companies. 69% of our revenues are coming from the top 20 global pharma companies. Given the domain expertise, given the technology portfolio, and this very large, credible customer base, which again is not just from yesterday, but a very long period of time, we believe we have a fairly strong advantage in this very complex market, by the way, and a market which is risk averse by nature.
Right, as you mentioned that you have a large part of your client base in Europe and North America. Give us some sense as to how the client budgets are really shaping up in light of sticky inflation and delayed rate cuts by the US Fed, especially in the North American markets. How is the demand really shaping up?
So, Nandita, this is again a very interesting industry to that extent. This is one industry which is really, I would not call it immune completely, but actually, in fact, let me call it immune. It is immune to these economic cycles, right? Healthcare industry is an industry which is fairly immune to economic cycles. Of course, every pharma company, different companies might have their own innovation cycles, and we work with the patented drug industry, right? Top 20 global pharma companies as Indegene. So every company might have their own innovation cycles, but this is an industry which is immune to the economic cycles.
So how many clients have you really onboarded over the past year, and what is the outlook on client additions for the next 2 to 3 years?
So I would point you again to the fact is, if you see our client base, I spoke about that we work with top 20 global pharma companies. Right. All the top 20 companies are our customers. Over the last, a number of active customers we have today are 65. Out of these 65 customers, 35 are $1 million plus in revenue, right? Which means we are getting more than $1 million customers from 35 of these companies. 3 of them are more than $25 million in revenue. And all these customers have grown, right? The way we think about it is 1 to $10 million customers, 10 to $25 million customers, and $25 million and above. So to that extent, mining our existing customers is a very important part of our strategy, and we have done well on that.
Right. Just a couple of more questions. Give us some color as to how you plan to improve your margin trajectory going forward, because I was just going through the last 3 financial years. Your margins have seen some bit of declining trend, right? So any game plan in place to spruce up your margins?
I wouldn't say that. If you see our margin profile, right, at a EBITDA level, our margins over the last 9 months ending December, are 21.9%. It is just in 2022 that our margins had declined to EBITDA margins had declined to 18.7, and that was on the back of a very significant growth. Our top revenue grew by 70% that year, right? And we had just had to do much more subcontracting, bunch of other things to deal with this very strong growth we had. Having said that, we have fixed that, right? Now we are 9-month EBITDA margins are 21.9%. PAT level, you see our margins being at 12.6% in the 9 months, which includes interest cost, which is going to be, and this is of a loan we had taken to fund an acquisition, and the proceeds of this IPO are going to be used to pay down that debt, and hence you will see a bump up in our PAT percentage also on account of this interest cost going away.
All right. Lastly, I was just going through your RHP. You also mentioned that there have been instances of non-compliance with reporting requirements under FEMA, and outstanding legal proceedings are also there against the company. Do you foresee any immediate risks arising from these issues?
No. So, listen, there are whatever disclosures have been made and our issues have been made in the RHP. Now the legal thing which you're talking about is a case which is one of those collective action things which has been going on for many years right now. And whatever disclosures have been made have been put out in the RHP.
Right, I'm afraid that's all the time we have for this interaction. Mr. Gupta, thanks a lot for taking out time and joining in, and wish you all the best for the IPO that opens on the 6th of May and will be open till about 8th. All the best and look forward to interacting with you again, post the IPO issue.